with the latest details for us. Hi, Willem, what can you tell us?
Well, what we've heard in the last hour or so from Sadiq Khan, the mayor of London, saying that those people you just mentioned were, quote, seriously injured, some of them at least. We've also heard from the top counter-terrorism official inside the Metropolitan Police Force here in London, talking about the incident itself. Armed officers from the City of London Police, that's the Special Police Force for the Financial District here in the heart of London. They were the ones that shot this person who was involved in an attack on innocent civilians on the London Bridge just behind me here. He was neutralized with a gunfire and, was wearing a hoax suicide vest. That may be the reason that they took this man out, the police. We're hearing some details about this being called a terror attack by the Metropolitan Police, people being stabbed, and some of those, as I mentioned, they're seriously injured. Sadiq Khan, the mayor, he's come out with a statement saying that in this attack, quote, we saw the worst of humanity. We also saw a response from members of the public and from our emergency services, the best of humanity. You can probably hear the police helicopter, huge amount of police boats out on the River Thames here. And just behind me, it's a bit dark now, but just a dozen or so buses that are stationary on London Bridge have been there for the last 3 hours since that attack took place.
Willem, thanks very much for that update. Willem Marks for us in London. We've got 27 minutes left of the session here on Wall Street. The Dow at the moment down about 88 points, so we're down about 0.3%. Coming up, we've got your last chance trade. And later, Baby Yoda merchandise is generating a lot of buzz on social media. But MGA Entertainment is hoping its new surprise toys will be the big winners for the holidays. We'll discuss with CEO Isaac Larian ahead. And as we head to break, here's a check on bonds. U.S. Treasury yields getting a bit of a lift today. The 10-year currently yielding about 1.77%. Closing bell back right after this. Welcome back to Closing Bell. Time to get back to Mike for the second installment of the Market Dashboard. Hi, Mike.
Hi, Wilf. You know, for months we've been talking, if not more, about the streaming wars, which provider is going to be the winner and loser. Netflix, Disney now trading, trying to compete for buzz out there with The Irishman on Netflix, and then, of course, all that Disney Plus has to offer. Here is a chart, though, of the two stocks since April 11th. This is when Disney detailed its plans for Disney Plus, the pricing, what would be on it, what not. The market immediately rewarded Disney and said, you know what? You are in the league among the winners in this area. So you see, it's been pretty much no contest since that date. But look at quarter to date. So right now, in the fourth quarter, which stock is leading? Well, it's pretty much neck and neck right now. Netflix has had a nice comeback, as a matter of fact, since right before the actual launch of Disney Plus this month. So that looks like pretty much an even game. How about for 2 years, though? This actually shows Netflix has built up a massive lead on Disney in terms of value creation, and it's eroded some of that lead over here. If it went back 5 years, this would be no contest. Netflix is up hundreds of percent more. So it shows you that at least the market right now is thinking these are probably going to be the incumbents. New entrants are probably going to have to fight for more mind share, I think, once people assume that the market is very receptive to both of these and maybe not that much churn or attrition coming to Netflix, at least in the outset of Disney Plus's launch.
Mike, I wonder if you went back to the first time frame, the April time frame from the announcement of the launch of Disney Plus, what had happened to their multiples relative to their own history. I guess for Netflix, you'd have to do it on price to sales. You could do it for PE for Disney. But Disney's has expanded in a way that Netflix hasn't, as it starts to be considered new media versus having previously been sort of semi-considered old media.
For sure, yeah. I mean, Netflix has always traded kind of on the far distant future when, in fact, it was going to be a free cash flow model. It's not just yet. And Netflix has pretty much traded in its range, largely speaking, in terms of multiples, depending on how you want to define it. But Disney, always been based on cash flow and earnings. Usually a little bit of a premium to the market, now a substantial premium to the market, and earnings are going to be flat this year. So clearly, some portion of Disney's business is being awarded with that growth premium, that secular growth story. Although I will say the studio business at Disney has continued to perform very well, and people are able to latch on to things like box office success and things like that to say it's not strictly about the hopes for Disney Plus subscribership down the road, which really is not going to be that much of a financial driver for quite a while.
Mike, thanks very much. Lindsey, are there any of the sort of old media valuations that are just so attractive still, even if they're not in the sweet spot of the industry, that start to be attractive?
Well, you know, I think those charts that Mike showed are really very interesting, because I think when a lot of the news came out about all these different streaming services that were going to be available, people started thinking that Netflix was going to be left for dead. But the fact of the matter is they're spending $15 billion, I think, this year on content. They have some really great original content. So I think that, like Mike said, they're probably going to be one of the winners at the end of the day.
All right, well, we have 20 minutes before the bell now, and here's where we stand. The Dow's off about 100 points. You've got the NASDAQ down 1/3%. Still ahead, French activists holding Block Friday demonstrations today. They're attempting to block the entrance of a shopping mall in Paris. What's behind the protest?
And later, find out how the malls in the U.S. are faring on Black Friday when we speak with the CEO of Mall of America.
17 minutes now, and we're at session lows. Dow off by more than 100 points. And Lindsey, we're just seeing our selling accelerating into the end of Black Friday. What's your last chance trade?
Well, it is Black Friday, so I was thinking about the retailers that we've been talking about all day long, right? So I want to take a look at Amazon because the stock's down 10% from its July highs. Online sales this holiday season are supposed to grow 14.1%. That's better than the 4% expected for the overall retail market. We know from Prime Day this summer that they had a very strong showing. The sales were better than Black Friday and Cyber Monday last year. So the consumer is definitely going to Amazon to shop online. And we know sales guidance was pretty conservative for these guys for the fourth quarter. And that's part of why we've seen the stock under pressure, along with their investments in one-day shipping, AWS. So there's a lot of things going on here. But these guys are professionals at spending money and turning that into profitability. So I think the weakness that we've seen more recently could turn into a profit.